right, the recent failures of Silicon Valley Bank and Signature Bank rattled people with cash deposits, right, at banks. But what about retirement account holders, right? Did they have reason to fear for their 401k? And IRAs, if their brokerage, their mutual fund company, or their plan provider fails? A lot to think about. So joining me in this sponsored segment, we have Cory Sickles back from Safe Harbor Retirement. Good to have you, Cory.
Good to be here, Robin.
All right, do people need to be worried, Cory? I mean, this is something that is relatively new, right? So people are just thinking about this and all the what ifs.
Well, I'm not going to say, flat out no. I mean, really the only reason you would have anything to be worried about is really fraud. Okay. So, when we start talking about retirement accounts, for example, the nice part about it is you're going to have some FDIC insurance if you have cash in the account. There's a lot of 401ks out there and retirement accounts that have cash or money markets, things like that. That's still going to be able to be backed up, by the FDIC.
Right. Okay. So that's good to know. And then the other retirement savings products, we talk about that too. I mean, people have all kinds of different investments. Does the FDIC protect all of those or just a few?
So the FDIC just protects the cash, and it's up to that $250,000.
Okay.
And then now you're going to have some regulators. Of course, the SEC and FINRA is going to be involved from a regulation standpoint. And then you also have SIPC insurance, which is going to actually cover investment accounts up to about $500,000. Investment accounts would be, of course, like mutual funds, stocks, bonds, anything that's from the brokerage standpoint of that. But again, it's not going to cover anything for possible fraud, or it wouldn't cover anything if the company that you're invested in would go out of business too.
Okay.
Right?
So do you just need to do research into the companies? I mean, is that something? Because a lot of these products are held by companies that have been around a long time and we feel secure in them, right?
Well, so the companies, if, for example, if you work at a company and the company you're at would go under bankruptcy.
Yeah.
You're really not worried about that, because then IRSA actually kicks in, which is another federal organization.
Got it.
And companies are not supposed to be able to commingle their own funds as well, with their retirement funds.
Okay.
So again, the only reason why you would have an issue with any of this stuff would of course be some type of fraud would take place.
All right, so let's talk about the man who had the biggest fraud, and that's Mr. Bernie Madoff. What if that happens? What if, Bernie Madoff 2.0 is sitting out there right now?
If you go back even since then, there's been definitely schemes out there.
Sure.
There was actually one even in Dublin, here within the last year or 2 years as well. So here's all I would say about that. Of course, we do investment accounts with clients, but a client is never going to write a check to Safe Harbor. They're actually going to write the check to TD Ameritrade, who's actually our custodian.
Got it.
Right?
Yes.
The thing that we have the ability to do is we have the ability to move the money around on the different portfolios that we have, but we don't have access to any of that cash in order to deposit into our particular accounts. So from a Ponzi scheme standpoint, that really cannot happen with that. So it's important to make sure that you're actually writing a check out to the company that you're investing with, or the custodian, whether it's TD or Charles Schwab or Fidelity. There's a lot of other ones out there as well, and not to them. And here's the Bernie was a hedge fund, right?
Right.
Here's another way to look at it. When you receive your monthly statement, is that statement coming from a third party, or is it coming from the company that you actually wrote the check to?
Okay.
So that's another good way to be able to do that. I mean, of course, you always should be aware, but from our standpoint, TD Ameritrade produces the statements for our clients.
Right.
Right?
Yes.
So they're not going to receive a statement from us saying this is how much money you have from a Ponzi scheme or a fraud standpoint.
And it's not as if you're saying, hey, write a check to Cory Sickles, please, and I'll deposit this for you, I promise,
that's exactly
right?
That's exactly right.
You kind of have to watch for red flags. You have to understand, a little bit about the common sense part of it. So then you meet with clients. I mean, you're going over all of this, obviously, in your first meeting with people and talking about, what they have and how to invest it. So if somebody is out there and maybe they're worried, maybe, they want to have you look at everything and make sure it's invested well, can they do that?
Yeah, we can definitely take a look at how you're invested, where you're invested, to make sure you're not overexposed with too much money with one particular bank or anything like that as well. We're really here to help, and everyone's you're afraid of the day you retire, but you're also now probably a little bit more anxious about, is my money going to be there because something does happen just because of everything that's been in the news with the banks and Ponzi schemes in the past.
Exactly. You want to feel secure no matter what when it comes to your money. So you can do that. And of course, Cory, you've got a couple locations. People can come in, have a complimentary meeting.
Exactly right. We have a location in Easton and Dublin. You can always visit our website at safeharboroh.com. And again, all meetings are complimentary and there's no obligation as well.
All right. Cory, thanks for the advice today.
Thank you.